afternoon. Welcome to the weekly livestock market update on Brownfield. I'm anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Today we're going to talk some trade. We're going to talk a little restaurant performance. We'll talk some jobs and some farm income. But to kick things off, let's recap what happened this week in the markets.
Yeah, this week on the cattle side, cash-fed cattle were basically unchanged on the week. The feeder cattle markets, though, were quite strong, anywhere from $6 to $10 higher this week. The February live cattle futures contract was up 67.5 cents, and the January feeder cattle futures contract was up $3.75. We lost 62 cents on the choice box beef price this week. On the hog side, cash barrels and gilts were down $2.50 this week. The February lean hog futures contract was up nearly $2 on the week. And we lost $4.32 on the pork cutout value as we had lower ribs, hams, and bellies really leading the way to that lower pork cutout value.
It's really been interesting watching direct cash cattle trade this week and the last couple of weeks. Really, it's been a little bit different of a story than what you and I had started talking about in 2022.
Yeah, that's right. You look at where we sit today. Cash cattle, $15.60 above where we were a year ago at this time. And, Megan, I think for a while you and I are going to be talking about even larger increases. Let's just hope the domestic economy doesn't cool enough to kind of tarnish that hopeful, positive outlook in the coming months.
We have talked a lot about the wild card that is the domestic and really ultimately the global economy as well, thinking about the demand picture overall. It is always a fun topic, and hopefully it remains a positive topic as we head into 2023.
Amen.
All right, let's talk weekly slaughter numbers. Recap what happened this week, coming off of that short holiday week last week.
Yeah, so for the week ending December 3rd, USDA tells us a run of 663,000 head of cattle this week. That's 67,000 head more than the shortened week last week, but 19,000 head less than where we were a year ago. Hogs, a run of 2.59 million head this week. That's up 377,000 head relative to a week ago, but down 66,000 head where we were a year ago at this time.
When we look at that in the big picture, talk to me about year to date. How is cattle slaughter running and hog slaughter as well?
Yeah, so on the hog slaughter side, we've been running lower all year. So we're down 2.9% year to date. On the cattle side, we're up 1.5%. We've been slowing a little bit that increase in cattle slaughter when we look at the year to date numbers.
Do you think it's going to be a different story for us in 2023 as we take a look at those year over year comparisons, especially on the cattle side of things?
So I think night and day is an adequate description of the difference that we're going to see. USDA's telling us from their last WASDA report down more than 7% in terms of beef production. They may be right. I'm not sure we're going to be down quite that much, but Megan, you have to go back to 79, 2004, 2014 to find those other years where we had similar kinds of decline. I always describe 2014 as a year that even Scott Brown could make money in the cattle business. 79, we also saw a 20% increase in fed cattle prices. 2004, we didn't, but as you and I both remember, bad cow disease lowered exports about 2 billion pounds that year. So I kind of throw that one out of the whole comparison set, but wow, it could get really interesting next year.
The cow disease to be named, not to be mentioned, right? Especially
BSC, yes, correct.
I was just saying, especially with the time of year that it is now.
Let's not have that Christmas present under the tree, right?
That's more like that lump of coal you find in your stocking when you're snooping.
Yeah, absolutely.
All right, ag trade outlook. As we take a look at 2023, talk me through some of these numbers and how we're looking and how things are starting to shape up.
Yeah, so USDA gives us quarterly update here. They actually revised down their FY23. So FY23 starts October 1st of this year, down 3.5 billion relative to where they were in August. frankly, that was lower soybeans, cotton, corn that kind of drove their forecast lower. They're actually calling for a $300 million increase relative to their August forecast for beef and poultry in particular. And so I think not a lot of change. When you look at overall FY23 export value of $190 billion, that comes off of $196.4 billion for fiscal 22. So perhaps the strength in the dollar has a little bit to do with what's a little less optimistic forecast for FY23.
Anything else you're watching as we look ahead to the trade outlook for next year?
To me, there are two things here. Number one, what are the other competitors doing? And I think everybody's seeing these higher costs, just as our producers are here in this country. I think in some ways we've been able to better hold up production than some of the other countries that are competitors. But number two is just going to be exchange rates. And, oftentimes I get to be focused on the weighted exchange rate, which is fine. It generally says we're strengthening, but it's going to depend on some critical countries in terms of what the US dollar looks like. But it generally has been strengthening against some of those currencies that matter for exports of pork and beef products.
I think it'll be interesting to see too, and I know we're talking outlook in terms of dollars, but development and growth. I know FAS has been looking at some trade missions in 2023 and picking those back up, and how that kind of sets us up for a successful trading relationship and diversifying where our products are going.
Yeah, so building more countries wanting U.S. products is certainly the key win here. And you remind me to make sure we talk about the fact that there's still supply bottlenecks that have affected our ability to trade to other countries around the world. Let's hope those continue to lessen as we get into 2023, and maybe that gives us other opportunities to grow exports more.
Let's talk restaurant performance index as we take a look at October 2022. Talk to me a little bit about where those numbers are stacking up, and how does that impact maybe the feeling about the economy as well?
Yeah, so it seems like generally we're getting a little better feel about where things are headed. That comes off of a July, August restaurant performance index that tended to be weaker relative to the previous months. October was up relative to September, up 0.9% when you look at the overall restaurant performance index. So good news there. I look at the current, or at least portions of the current situation index. So same store sales were up 1.5%, customer traffic up 1.3%. To me, those are good news out of the October report relative to where we were in September. Even expectations that had been dragging a little bit as concerns about higher interest rate, economic slowdown had kind of dampened the outlook for the next 6 months. But the September number came in, it was also up 0.9% relative to where it was in October. Sorry, September, not October.
I knew where you're going. All right, let's talk farm income as we take a look at what USDA has for 2022.
Yeah, so USDA gave us revisions for their forecast for 2022, and they raised their projections to $160.5 billion. That's up $19.5 billion from where we were a year ago. So stronger farm income. I remember what was a 2013 U.S. farm income, $123.7 billion, saying, well, we had the second golden age of agriculture. And little did I know we were going to have the third golden age of agriculture so quickly. But it's amazing despite very high costs. So USDA has total expenses at $442 billion, up nearly $70 billion relative to 2021. Even with those very high expenses, net farm income up again, $19.5 billion.
Sometimes I like trying to fathom that large of a number, and especially as we're talking about concerns about profitability and bottom lines and some of the struggles producers have faced this year, especially knowing acquiring products, being able to move products. How does that set farmers up going into a 2023 Farm Bill discussion?
Yes, so there are pockets of concern for sure. So I don't want to downplay those, but generally I don't hear the screams from the countryside of we need help in terms of safety net. And I think that is one piece of the puzzle in trying to get a farm bill to the finish line. When I think about the House next year, trying to find a farm bill that gets 218 votes may be a tall order. I think you're going to have some members there who are going to want to cut SNAP, others wanting to increase SNAP, others wanting to cut Title I farm programs, others wanting to increase Title I farm programs. I don't know how you coalesce around something that gets you 218. And again, no real stress. Now, I will say, oftentimes when we run production expenses up like we have, we're $100 billion higher in 2022 than we were in 2019. If receipts were to decline significantly, those expenses probably stay higher. So we could get in a cost price squeeze relatively quickly, but that's not been the case when we look at these 2022 numbers.
We're going to have a couple of weeks where we don't have as many reports to talk about, especially that last program of the year. And I think we're going to pick your brain and talk a little Farm Bill as we head into 2023, because I think it's going to be a large discussion. There still has to be a ton of field hearings or debate, and the price tag on it is a little shocking, quite frankly.
Yes.
When you think about a Farm Bill that they're talking about a cost of $1 trillion over its life, right?
That is correct. And I certainly think we will have much debate about trying to get a farm bill to the finish line in 2023. So I don't want to suggest that debate won't happen. Whether we're successful to get one to the finish line, that's a discussion we can have in more detail down the road.
Scott, as we wrap up today, jobs report, fairly positive jobs report coming out today.
Yes, I laugh because it's amazing how we've changed our mind about these jobs reports. Pre-report expectations were for an added 200,000 new jobs. And I think the idea was, are we trying to slow that new job creation and work on inflation? So as the Fed's been increasing interest rates, I think some were thinking that we were going to see less jobs out of this report than the 263,000 that we got today. So despite it was better and beat expectations, the concern was that that's going to push inflation here harder. And when you look, I think maybe more importantly, to average hourly earnings, average hourly earnings, I'll get it out today, up 0.6% for the month. That was twice what pre-report expectations would have suggested. I think that also might weigh on the outlook for inflation, and who knows, maybe the Fed decides another 0.75 point in the next few days is what they want to do. And I've heard a lot of 0.5 point increases, and I think this report only perhaps tries to raise the next adjustment in interest rates from the 0.5 point that we've been hearing.
How much does what happens and what we're watching in a jobs report stay in the back of our minds when we're thinking about demand? We're in the holiday season. How does that play out to disposable incomes, being able to continue to see strong demand for our beef and pork products, which we've enjoyed and has been so crucial to producers right now?
Yeah, so I'll really stay focused here on beef for a minute, because if we're going to have a 7% decline in beef production next year, and we're going to have I don't know, let's say we get our 20% increase in fed cattle prices, we're going to have higher beef prices and potentially much higher beef prices. People employed with higher wages, we may like that in terms of their ability to be able to spend on beef products. That may not help us on the inflation front, but might give us more dollars to put on beef products, which I think is of beef and pork, the commodity that I most worry about, that starts to see some issues if we don't continue to see, fairly strong growth in the economy. So we'll wait and see, but it's complicated when you start talking about everything that's at play. I will still say downside risk for cattlemen in particular, I think, comes from this general economy discussion we're having.
I feel like cattle producers are probably going to get really tired of you and I talking about managing risk and mitigating risk as we get well into 2023, because it is the conversation that I have with cattlemen, the conversation that I have with producers. What are you doing to manage your risk moving forward?
Yeah, and I'll say, I keep saying out loud, of which I will say, I hope people do risk management. They pay the premium if they're going to do LRP or whatever choice they make. And I hope they don't get a payment from it, which may fly in the face of, I don't want to pay premiums, then not to get an indemnity. But paying premiums and not getting an indemnity means cattle prices went higher. All you're doing is trying to protect that downside. I will say, reduce the cost of the insurance as best you can, but no insurance might not be a good strategy.
Scott, as we wrap up today, looking ahead to next week, a couple of biggies for us.
Yeah, that's right. So we get monthly trade data out. It'll be good to get another month of trade data to see especially where we sit in terms of beef and pork exports. USDA gives us a monthly WASDE report, and we finish the week with consumer sentiment.
Scott, always great to see you. I will talk to you next Friday, and I will see you in person in just a few weeks when we will be at Missouri Cattlemen's.
That sounds great, Megan.
All right. So our weekly livestock market update delivered your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And if you want to see what's going on the commodity markets, check out John Parkin's Market Minute every day. Have a great weekend. I'm Megan Grevner for Brownfield.